Mr. Lombardy from 3IQ coming at 2. You said 2 to 2:30.
Okay, so that's what I thought. Okay, so at 2 o'clock we got some outside people, and at 2:30 we'll have the other guys. Okay, who am I missing here? From the Ethereum. Where's Steven? And Brian, but Brian is traveling to Washington, so he's having a bit
Yeah,
of
I'm here. I'm on.
Oh, yeah, he's here. Okay, good. So as long as, okay, I got 2 of you. And
Professor, is that Bloomberg News behind you? What's going on?
yeah, you know, in case I don't want to miss any major event here. Okay.
You should have the Twitter feed up. I think that'd be more informative.
Yeah, I'll work on that. Okay, so what's going on? Because I know Jordan needs to go doing something more important. So Jordan,
I guess
where are you guys?
Yeah, so our last point was coming from putting like the presentation for the conference that we thought went really well, and that was great. So those were just kind of like condensing all our ideas and putting it together. I guess from my end of the progress that was really made, I was able to speak with someone named Ben Steiner, who runs like asset management, portfolio management at BNP. And he basically did all of this. He's like published papers on like this type of work and neural networks. He spoke at Quant University with Sri before. He's really just a helpful person to talk to. And I kind of ran some ideas, and it kind of just helped me fine tune our idea. So rather than trying to just like maximize the most amount of return we can generate given a level of risk, we're now focused more on something called alpha purity. And it's really like that epsilon that we brought up where all that idiosyncratic risk.
I'm sorry, who did you talk to? You speak so fast. Who did you talk to, Jordan, at BNP Paribas?
Ben Steiner. I found him through one of like the Quant University lectures that was given. So I sent him a message and was like, hey, this was awesome. You mentioned multi-factor modeling and neural networks. So I'd love to like have a follow-up to talk about it. And it took me a while to actually get him on a call, but I finally got him on a call a couple of days ago. And he really he didn't provide that much insight, but he was like, what he did say is once you like are a couple months more advanced into this project, then like reach out and I'll be able to help you a lot more. But because like it's still getting fine tuned, he wasn't like that helpful, but he did clarify that he basically was like, rather than trying to do a lot of everything, you should pick one specific aspect of this and really try to specialize and focus on that. So in the aspect of like the model governance, he was like, when you develop your model, make sure you know why you're using the specific model, what can go wrong, how you're tuning it, because you can have this idea, but you can get distracted with all the other aspects. So kind of as we go forward, the focus is really on the explanation of why a factor will generate a return, a lot more so than just what factor generates the most return. So that was something that we kind of took that was beneficial. So
I mean, that obviously this is a big plus whenever you do a project. If you're able to bring people from the outside in, that is a big plus, because the idea is you want to increase your knowledge, which is always good. But obviously you want to get into the network thing, and then more importantly, you have to be relevant, right? So obviously the guy is talking to you. So which group is he in? Do you know?
Yeah, I could pull it up real quick. Yeah, he's been.
That's unusual for a guy from BNP. I was there, so I know, to say, hey, so either he's doing research at BNP, or.
When I got him on the call, I was like respectfully, I was like, why are you speaking to me? Like I'm just.
I know exactly.
Like one of those, but I don't know why I confused this thing. Yeah, he worked at BNP for back in 2011, 2015, dealing with absolute return. And then he moved to CIT and he was head of model development. Now he's an adjunct lecturer teaching quant risk management at Columbia, and he runs global income at BNP.
What does he do? I'm sorry, he runs what at BNP?
Runs, BNP Paris Asset Management, the global fixed income team. And it's like a thing. He handles like chief of staff responsibilities for the global fixed income division. And he's like been a consultant for like model development on like generating alpha and like published papers. So this is
interesting. That's a major find. That's great.
It was very beneficial. But like I said, like he didn't give that much useful information because he expected us to be in a later phase and for him to like give advice on like the actual tuning of the network or like the model. But I still was able to give him the preliminary of where we're at, and he was able to give us some useful information. And basically what I took from it in our conversation is that the neural network is going to be very helpful in increasing the predictability of what can happen. But when you use that on how to predict what's going to happen in the future, then it becomes a whole new challenge. So he wasn't necessarily saying stay away from that, but he was trying to, because he specializes in one aspect of like when to use a neural network in this field. And it could be very beneficial to have it for increasing your predictability of like your explanatory power. Obviously, he won't help us. The neural network won't explain what goes on in the middle, but it will help us connect the bridge between what we think and what actually happens. So in that aspect, he kind of gave us like the thumbs up, like continue on like that path you're going on and reach out to me once you make a little bit more progress. So we're starting to like put it all together. We ran through like the math of like how we're going to approach it over the next couple of weeks. Like when we sent you that like proposal of like our steps, we're now at the step where like over the time is just going to be like actually coding it, writing the script, testing the math, running the statistical studies, and seeing what like conclusions we can draw.
Okay.
That's my end.
Randy?
Hi. As you saw in the conference last week, my next steps are to actually create the Markowitz approach and the model to determine the weights of the securities. And so we're going to do a basic Markowitz approach and then explore 3 different variations of it. So right now, I just need to determine like how to create that first model, just that basic mean variance modern portfolio theory approach. And so I got started a little bit with it in Python. I was having a little trouble, but I've been trying to find some resources online because I know the basic structure of it and I know how it works, but I just need to figure out how everything comes together and how to code that.
Are you talking to anyone else besides? Are you going out with? I thought you spoke to Dr. Zuluaga, right?
Yeah. So he was really helpful. He talked a lot more about the theory behind it and the basic like approach and the formula and how it works. He usually uses like MATLAB and AMPL to do it, and we are doing it in Python. So I have to figure out how to like make that switch like to Python. And I do want to reach out to somebody else because I know within this program there is a class in financial optimization that talks about like the Markowitz approach that we're doing. I think the professor is Professor Pinter, I think.
Zuluaga teaches it as well.
Oh, he does? Okay.
Yeah, he does. Him and Pinter teach it together, or like flip-flop.
Okay. So I'm in contact with Professor Zuluaga, and I might also reach out to Professor Pinter.
Okay.
Sorry, I also forgot to say, me and like Brian, we like gave a quick call to Professor Kish, and we kind of walked through like before the conference, like the theoretical approach of like if what we're doing theoretically can be done. And like long story short, he was like, yes, because you're asking like if you worked with professors. So he's someone we like reached out to and was like helpful.
Okay. Brian, are you able to talk on the road there? What's going on?
Yeah, I'm able to talk. I don't want to repeat what's being said, but yeah. So I guess I'll talk a little bit about the technical
Talk
stuff.
about what you're doing. I mean,
Yeah. Jordan kind of got into it, but so the neural network part in the middle, of the kind of the bridge between Jordan and Randy, that is not as easy as we all expected it to be. So I have a very basic system ready to go. It's going to continually be refined as the semester progresses and into next. But I am ready to step in and assist Jordan on the beginnings of the cross-sectional analysis. and implement some of the stuff that Dimitri talked about at the conference. That's going to be critical in understanding and, more importantly, making sure our models are robust and not just some, off the street kind of stuff.
Okay.
I've had experience in a little bit of the stuff that Dimitri was talking about. So Jordan and I are gonna get messy with the code and the math, and not the math. The math's not that messy, but more importantly, the code and the data behind that is gonna be the roadblock. Jordan, anything to add on that on the cross-sectional intro LLS part?
Yeah, just something like Brian really said, something really to add. It's just like to add, like I said, like now we're just going to be like coding essentially the cross-sectional analysis. So we're just going to be looking at the correlations between the risk and return. There are correlations between what happens, try to find some causation. We're going to be doing exploratory data analysis and just like playing around with it. This is going to be a roadblock for the road. I forgot something else that was brought up, like with this guy, Ben Steiner, is saying, obviously, like it's very arbitrary in how you define which factors. So like I was giving him the example, I want to look at profitability, but profitability could be net profit margin. It could be gross margin. It could be compared to the industry standard. It could be one standard deviation or like a Z-score away from its like return. There's ways to look at it arbitrarily. So a lot of it is going to be playing around with just different deviations of factors once the model is actually like structured and set up.
I guess to kind of wrap that in a bow, in other words, we're going to need to play around with how we define each factor. So that's going to be a lot of actual like engineering of what profitability, for example, means, or any of these other factors. That's going to be interesting because kind of that's like the proprietary part. Each firm out there defines each factor on their own. We're going to have kind of our own take on that. Which is kind of cool to kind of put our own stamp on it.
Okay. Since we are waiting for Tom Lombardi there at 2 o'clock, I wanted to give a chance to the Falling Eyes people to give a quick update early on, because we're going to take some of the 2 o'clock to 2:30 to 2:30 to 3 o'clock. Howard Chang, are you there?
Yes.
So what's going on over there?
Okay. So for this week,
Yeah.
As Hua told us that like some of you guys asked him about the some explanations over the machine learning terminologies.
Who
So,
asked? I'm sorry, I didn't hear that. Who asked what?
He didn't specify the person, but like he said like some of students like was confused about some terms mentioned in our the week before last week's presentation.
The
So
students
like,
in the classroom, you mean?
Yeah,
Oh.
I assume so.
Okay.
So like we made a educational PowerPoint
Right.
for the.
So let me know what your contribution was, and then I'll ask everyone else after that.
Yeah. So like, can I share?
You should be able to. No?
Okay. Well.
Can you share the screen?
Yes. Just in 1 second.
Got it. We see it.
Yeah. Okay. So like, so we made this slides to explain some basic terms in the the model. What is for example, like what is the rationale lying behind the
can you hear me?
SVMs or the vector machine? Yeah, I can hear you. Can you hear me?
Yeah, when you say we, because there's 9 of you in this press, can you tell me what you worked on? And if somebody has worked on that, then whoever presents should present whatever they worked on. It's a lot easier for me.
Well, like for this week, we
Yeah.
just like Hua made a document for us, and I just kind of like made this PowerPoint, and the other guys made some edits on this after I made this PowerPoint.
So who wrote the PowerPoint? Who put whose idea am I looking at here?
What needs to?
It's Hua's.
Where can Why present his own work? It'll be a lot easier.
Well,
Is he there?
I didn't see Hua in this meeting.
And so what did you work? Did
He
you
isn't
so you
present. We held a meeting on Wednesday night, and we discussed some potential current potential problems lying ahead of us for this project in the following future weeks. So like for instance, like we are considering adding some noise data as I wrote in the update. Because like the whether or not the stock is gonna recover is kind of like a parameter, and which can be toggled by the investors later after we created the UI user interface. So like for instance, like if the stock experienced the falling knives, and it recovers, but like based on our current criteria, it failed to meet the criteria. It's like we're gonna label it as 0. However, in the reality, some of the stocks gonna just go bankruptcy after it experienced the falling knives. So like in our current data set, we haven't considered those who experienced the falling knives and then just go bankruptcy. So like in the following weeks, we're gonna make some small changes to our data set to add some more stocks that's gonna that's went bankruptcy after experiencing the falling knives. Is that clear?
Yeah.
Yeah, and another problems we discussed is well, let me take a look.
So continue the presentation then.
Yeah, I'll just take a look at it. Yeah, that's right. So since after we put data in the SVM support vector machine, we gonna create a confusion matrix, which looks like this, and the
Looks like what?
can you see this screen?
Now I only see October 2nd update.
Oh, sorry, I'm gonna. So how about now?
Yeah. Yeah.
Okay.
What is this
Okay.
now?
So
That's
this
a
is
Word
the
document, right?
yeah, it's the document I sent you. So like this is the confusion matrix created after the SVM. So like the SVM is gonna minimize the area 3 plus area 2 while maximizing the area 1 plus area 4. So like however, if we think like an investor, like for area 3, it is the scenario that the stock experienced the 49th events, but like it failed to recover in the future. But our machine predicted to a positive conditions, like we predict it's gonna recover. However, in the reality, it doesn't recover. So like this is this is a scenario that investors want to circumvent the most. So like one of the issue we are facing right now is how much penalty we're gonna put on to the area 3, so that when we are trying to minimize the area 3 plus area 2, we can also minimizing the area 3 at the same time. So like we're gonna like put a penalty or cost on this area 3. So like
so I understand. So area 1 is a true prediction, meaning what?
Meaning
found,
we predict the recovery and it did happen in the future.
but how are you gonna know that? I mean, are you reverse engineering it?
Yeah, we use historical data to make prediction in the future.
Okay, and then area 2 is
Area 2 is a false prediction, but it less costly than the area 3.
what do you mean by false? Meaning that it did not recover as much?
No, it did not recover, but
okay.
But it did recover, but we in our prediction model, our result is it didn't recover. So like
it did recover, but you said it was not going to recover.
Yes, it just same as the area 3, which is it didn't recover, but our predict it's gonna recover in the future. However, the cost of the area 3 is far more bigger than the area 2, which gonna bring to the investor. So like our goal is to minimizing the area 3 while minimizing the area 3 plus area 2.
And what's area 4? You need to make it clearer, but
another it is another true prediction, which is the stock did not recover, and in our prediction model, we made a right prediction that it did not recover.
So you want area 4 then?
We want area 1 and 4 to be as big as possible, and the 2 and 4, the 2 and 3 as like
little as possible.
Yeah, and for the for the area 2 and 3, they are a little different because for area, let me see, area, yeah, and for area 3, it's more important than in area 2, because if there are a lot of data, if there are a lot of incorrect prediction in area 3, the user will lose money. But for area 2, they will not lose money. They just can't earn money. So this is the center conception for this matrix.
Go ahead.
Yeah, and I just help him to introduce this matrix, and we actually we made this matrix for the data we're using. We separate them to two different parts. And the first part is for training. And this matrix, well, we just got a good result for the training part. But for the testing part, the model's ability becomes a little not as so good as in the training part, and we are actually it's some problem about the overfeeding, and we are trying to regularize it. That means like give the model some punishment and try to solve this problem. This is the work we are doing for this week.
Yes.
Yeah, this is maybe where we'll talk about a little detail about it.
Yes, maybe we can present the PPT for Professor Soto. Can we?
I think it's 2 o'clock.
Yeah. Are they? I'm still waiting. Do we have? I don't see them. I sent them a text. I'm waiting for them to come on, but they haven't come on yet.
Yeah. Can we show him the PPT?
Oh,
Yeah.
hold on a second. I see Tom Lombardy has joined us. Wow, we're gonna have to delay. We're gonna have to delay. Hey.
Thanks for having me.
You're in smack in the middle of why? Can you stop sharing the screen for a second?
Sure.
So we are pleased to have do we have Zane anywhere in there? No, I don't see him. Okay, so guys, we have Tom Lombardy from SBMX, and so this is what you're looking at, Tom, is you're looking at our Capstone class.
Mm-hmm.
What we do on the Fridays, like for a couple of hours, we go through all the projects, and that's you just go to hi Liz. You just caught us in the middle, smack in the middle of it. So you have 30 minutes. Maybe the people that are more interested in what you have to say, obviously, are the one that works on the ETC projects. I have Brian, Matsela is there with my new microphone, hopefully. Who else do we have that I'm missing? Steven is here. Yeron also following up as well. Hi, Liz.
Hey.
Okay. Hi.
Hey, Liz. Good to see you.
Great to see you. So glad you could join us and share your experience in both traditional finance and crypto.
Sure. Absolutely.
So, floor is yours, and just go ahead, and then I'm sure the guys will have questions.
Yeah. Okay. You guys are currently in school right now, correct?
Yeah, that's a class. It's
Do we in the class are we business majors, technology? What's the focus?
This is the master in financial engineering, i.e. they're mostly quants, so they take finance, engineering, and math.
Perfect trifecta for Bitcoin.
Trifecta is the word. Hey, Zane.
Okay, more questions. Raise your hand if you say you have a high level of knowledge of cryptocurrency. Okay, how about medium level knowledge?
Brian is on the way to Washington, but you could see his big thumb.
Okay, so okay, let's see. In terms of Bitcoin, everyone knows what Bitcoin is. Raise your hand if you know what Bitcoin is.
Matsela, raise your hand, please. Okay.
Raise your hand if you have invested in Bitcoin ever before. No investors. Okay, let's see. Raise your hand if you know what a DLT is. Raise your hand if you know what a distributed ledger technology is.
Yes.
Okay, okay. Raise your hand if you have medium knowledge of economics. Okay, all right.
I hope so.
I know my audience. I know my audience. Excellent.
Yeah.
Okay, at some point I'd like to share my screen, but maybe I'll just talk for a little bit.
You can share your screen. Yeah, anytime you want.
Okay, great. So, Tom Lombardi. I am managing director of 3IQ. We're an asset manager out of Canada. We have the world's only fully regulated and major exchange traded Bitcoin funds. Why is that important? It's important because Bitcoin's hard, right? Bitcoin's really hard. Like, you know, you guys can, if you have extra money, you can fire up a Coinbase account and buy some Bitcoin. But once the dollars get bigger, responsibilities become bigger, and theft and loss become more important. It's one aspect. The other aspect is when you're an investment allocator. So those are institutional investors, wealth managers, financial advisors. They have an increasing amount of what's called fiduciary duty. So they can't screw up, basically. If they screw up, their career's on the line. So they're very conservative, and not just what they invest in, but how they invest in it, right? So I want to make that distinction here. Bitcoin's easy to obtain, and it's even easier to trade. That's, you know, part of the beautiful design. But when we have lots of capital coming into this market, bigger investors need safeguards, and they need the proper custody, the proper security. They need the right reporting. They need all these things that come with making traditional investments. So we have it's essentially, you know, the easy way to say it is, it's Bitcoin with a ticker symbol wrapped around it. And that's how we've made the adoption of Bitcoin easier. We're in preliminary prospectus with the regulators to offer an Ether fund, which is the native token of Ethereum. How many people have heard of Ethereum? Excellent. Okay, great. So, you know, I'll start from the beginning, but I'll walk you through this winding trail. But where I got to was, how do I get Bitcoin in the hands of billions of people? That's my like mission in my career. How do I allow for investors of all sophistication, of all wealth levels, to be able to get exposure to Bitcoin? And that's sort of where I fell with 3IQ. So way back when I was sitting in your dorm rooms, you know, I was studying finance, very driven in that respect. I got an internship with Bank of America in their you know, commercial lending group. I got my internship through my professor. He knew of this opening every year. He sort of picked his, I'll call it favorite student, maybe not best, but favorite, or most, you know, best candidate. And I sort of fit into that. So internships come from professors. They come from friends and family. I know you have career resources at school, and you may apply for things online, but I encourage you to talk to your professors, talk to your networks, ask favors from your parents, friends, and family. After school, I went to work for Bank of America. You know, kind of drop these breadcrumbs of advice. I had a lot of different aspirations, but I think I did a good job of just pick a brand when you come out of school and you get your first job. It may not be the sexiest job. It may not be the the most socially fulfilling because many of the top tier branded companies fall short of some of their social obligations. I will say, especially banks. But go for a branded company. That's a great start, and usually the second, third step opens up more of your passion. So I did that, and then I went into I worked in investment banking in Chicago, and that was a really good experience. Again, it was I had been working with a senior executive, and I really just asked him for a favor. I said, I'm done in commercial banking. Can you help me get into investment banking? So asking people for favors, reaching out. So I did that, and then I went to business school. I got my MBA at Pepperdine. After that, I joined a private equity firm in San Diego. So, banking, business school, private equity doesn't get more sort of, financially sterile than that. So then I was just like, okay, like I really need to. You guys are technology forward. I need to get on the tech side. So I had been sort of nights and weekends advising this company in e-commerce on their they had an offer to take the company out, and I did some work for them. But it was in e-commerce, and it was great. So I eventually took over that company. It was a small team of like 5 people. But understanding like sort of how, again, I'm a finance guy, finance degrees, learning about coding, learning about networks, learning about data, learning about how all of these information flows happen, just blew my head away. It was amazing. And I really went deep. I had a team of like 6 engineers building basic LAMP stack, applications and websites, and really it came. So we were processing a lot of money through our credit card systems, and I kept finding ways for cheaper payment processing, right? So I'm like, I do a Google search, credit cards. Credit cards are expensive, right? If you're a merchant, you have to give up like 3, 4, 5% of your revenue to credit card companies. It's extortion, if you ask me. So I did a Google search. How can I save money on credit card processing? Page 2, page 3. Halfway down page 3, Bitcoin. Okay. Peer-to-peer, trustless system of virtual transfer of value. Little too edgy for my shareholders. The board, I brought it to the board. They said, no, we're not doing this. At the time, Coinbase had Coinbase Commerce. So we could have plugged into our checkout page. They said no. And they said, we're not going to do this. And they said, stop talking about it. Stop thinking about Bitcoin. Right. So what did I do? Right. Go back and lay awake at night, reading, researching, rabbit holing. It's called. Once you go down the rabbit hole, sort of a poor euphemism because it's, I think there's a reference to illicit drugs, but so really just became absorbed by this concept, right? And then so this is so it was like it started with finance. I knew that banking was broken for a lot of reasons, and then it got into like technology. Like I understood what was possible. I didn't know how to do it. I didn't know what tools to use. I just knew that it was possible. And then I had to kind of go back to like economic theory. And this is where things get really, really, really interesting. I want to do a screen share quickly. Screen share, this deck. We're going to share. I'm not going to take too much time on this because view, how do I present? Slideshow, present. So this is money. And if you had $1 in the year 2008, it's probably worth in a you know, in a real basis, worth 25 cents today. This is when you hear, so I'm gonna throw some sound bites at you. You've heard this, savers are suffering, right? People who save money are suffering. Why? Because the monetary base of the global currency, US dollars, is being debased. It's being diluted. It's being printed. You've heard all of these things. So if you have money sitting in the bank in 2008 and you have money today, that money compared to what you can invest in, it's financial inflation has been the biggest one. But there's also been some moderate inflation with low inflation with goods and services. But we're not seeing it in the headline. The US government, monetary systems all over the world are diluting and devaluing the value of the US dollar. And this chart says it, right? And look at what happened with COVID. The US Treasury partnership with the Federal Reserve created $3 trillion out of thin air. When I say out of thin air, it's not really out of thin air. It's a share of what you could buy it. So again, it doesn't show up in headline inflation, but it did show up in financial inflation. Look at what happened to the value of, you know, tech stocks, you know, the things that have longevity over time. They've gone up 100x since 2008. Look at things like gold, precious metals, Bitcoin have gone up substantially. So maybe the value of a gallon of milk hasn't gone up by 10x, but nearly everything around. Here's another good example. How much at Lehigh, the cost of the tuition inflation over the last 10 years, I guarantee you has been double digits. Maybe not guarantee.
Next topic, please. Next topic.
Next topic. Okay. Okay. So at the same time, we're increasing money printing and the interest rates. I won't cover that. But some of these things. Okay. So, you know, I'll stay on this. So what I'm trying to say is my economic realizations over the past 5 years has been, I need to be invested, number one. This is not investment advice, but US dollars that you keep in a bank is decaying every day. 2, I need to look for it's called hard money assets. Gold is the leading. You can put real estate and maybe offshore accounts and some others, but gold has a finite supply. It has global demand. It has no industrial application. And you know, you can make the argument that Bitcoin is digital gold. So that's pretty much I'll go with the economic side of this. Okay. So I'll stop sharing because this is a bit of a so that was kind of, so getting into this. Okay, I had this realization, okay, around Bitcoin. You know, it's money over internet, right? You guys talk about like data over internet, or I mean, it's really, you know, it's money, or it's the new money protocol, money over internet. We have the luxury of having PayPal, Venmo. It's almost seamless for us. But globally, if anyone, you know, is from another country or works with, you know, sends money to and from, it's so difficult, it's so expensive. But really, the key aspect for me of Bitcoin is it's a self-sovereign asset. It means I hold it. I've got some here, I've got some over there, I've got some in my safe upstairs. It's mine. You can't take it away from me. And if I'm a refugee going from one country to another, I can, there are Bitcoin wallets where you have a seed phrase. I can remember 12 words in my brain that when I get to the other country, I can open a wallet and claim my Bitcoin on the blockchain. You can travel across borders with millions of dollars in your brain. How powerful is that? So that's and then the hard money thesis, it's valuable, and everything around you, dollars are being debased, and global assets are looking for yield. So it's super important. So realizing this on a it took a few months. I realized that like I had to pursue this somehow or another. So I had a bit of an exit with my e-commerce company, which is beneficial, and I took 2.5 years off of work. I have a young family, kids, and my wife's like, "You're crazy," and I said, "I need to go up to the mountains and snowboard and just think about this new concept." I had to pitch that a few times before it actually worked, but it did, and I stayed invested. Right, I stayed invested in that, and that was very beneficial. But I'm always working, and I want to work, and I want to be focused. So fast forward back to 2018, 2017 was just like euphoria in cryptocurrencies. It became overstretched. We imagined things that were not possible, and pure exuberance that deflated. And a lot of projects went away because they shouldn't have been there. It really comes down to like Bitcoin as really that one true asset. And then we have other things like Ethereum Classic. These are blockchains where if Bitcoin is to money, Ethereum Classic is to just a database, a distributed database where you can facilitate movements of value over a peer-to-peer basis. But Ethereum takes it another step further to make it programmable money. And that's where it's super powerful. So anything you can fit inside of like an if that, then this statement, using the right data sources, you can start to program what trade finance, import, export, insurance, supply chain, so many different industries that can be enabled. And we're all sort of moving towards this peer-to-peer nature and trying to rely less, on governments and large companies. But the sad reality is today we're relying on both of those entities even more than ever. So I see a future where we can move money freely over the internet. We can all have our own assets, claim them, and have them censorship prevention, not having a dictator take them away from us, or someone telling us that we can't do the things that we need to do. So those are really the core principles. And so I got back into finance, Wave Financial. I was doing a lot of working in Bitcoin options markets. We were doing crypto-backed lending. There's a giant capital market industry around exchanges and brokerage and prime brokerage and custody that is exploding right now. Names like Fidelity, TD Ameritrade, you've got LedgerX, you've got all these companies that are building the pieces of financial infrastructure that will change Wall Street as we know it. So that's what I'm doing. Questions?
Wow. Okay. So what does your company do? I mean,
we wrap a ticker symbol around Bitcoin to make it easy for people to you can buy Bitcoin from your brokerage account. You can put it in your retirement account. These are two things that are currently not accessible. You've heard of Grayscale's product, GBTC, which is a good one. It has its downsides. It does not afford institutional investment, which ours does. But after all this sort of like navigating all these complicated technologies and all these offerings, getting into these options markets and using this new collateral type, right? Like lending is really cool because collateralized lending. If I'm a farmer, I may have a bunch of tractors and someone loans me money and they say, okay, your tractors are worth $1 million. I'll lend you 500,000 to keep a nice margin of safety. But that lender doesn't have access to your tractors. Like for my last company, my clients, we were borrowing money and posting Bitcoin as collateral, right? Because it has a real-time price and it can be liquidated in seconds. So it's like the perfect collateral type for asset-backed loans. So going through all these sort of like reimagining capital markets, it's, you know, burgeoning industry, great. I really came back to like, I need to get Bitcoin in the hands of everyday people. You know, people like you, people like my father and my family, and, you know, retirees, and give them a path towards ownership that doesn't have the friction that having a wallet and custody and security and insurance is difficult to find.
I wanted to direct the conversation a little bit more. Can you guys hear me?
Yeah, we could hear you, Brian.
I wanted to direct this a little bit more to the technical side. A couple of us here on the call are working with Liz and Zane to create a Python library to analyze the tokens that are underlying, that are laying under the smart contracts on the Ethereum ledger. My question for you kind of is, right, so you're managing this fund. When you guys see prices moving up, down, right, in traditional equity markets, you know, we have maybe you run like a DCF and you evaluate, you know, a stock, or you do some quant magic and you evaluate it that way. How are we valuing? What's the valuation methods that you're seeing day to day? Let's focus on, I guess, some of these tokens that are floating out there. How can you say something is a fair price for, let's say, I don't know, Chainlink?
Yeah, no, great. That's a really good question. That has been a popular question for, you know, since the inception of these digital assets. I mean, if you you know, DCF analysis on cash flows is tried and true, works today, and you know, those valuations right now are completely distorted in today's equity markets. So we're in a scenario where value investors are saying, I'm not stepping into, you know, I'm not even stepping into like IBM or Johnson & Johnson stock because it's wildly overvalued based on a DCF, discounted cash flows. So, or even actually a better comparison is to look at a company like Zoom, right? We're on Zoom, we're using it right now, right? To talk about adoption. There is no valuation metric for Zoom. Like there's some, I think it's like $800,000 value for every single user. Like that's using an imagination past any investment thesis that would go in front of a committee. Now, breaking this down, you know, we look at Bitcoin in a lot of different ways, and still it's very difficult. But you know, looking at Bitcoin as a comparison to gold, as a potentially a safe haven asset. It doesn't, Fidelity calls it an aspirational safe haven, right? So how do you value gold, right? How do you value artwork? How do you value antique cars, right? It's a function of liquidity. It's a function of, you know, interest rates, how cheap you can borrow money. So it's difficult, right? Now, when, you know, I've been playing around in DeFi and doing a lot of research around there. There's a number of tokens out there that have a lot of different aspects to them. So some are like the example, I guess the easiest one is Uniswap just came out with the Uniswap token. And I was luckily airdropped some because I've been playing around with it. They're basically using like almost like it's a fee model. So a percentage of the transactions, you know, accrue to the asset. So there are certain mechanisms that are trying to you know, trickle down to token holders. Another one would be like the Binance BNB coin. This is not ideal because it is somewhat discretionary, but it's sort of like a dividend, or it's a dividend burn. So Binance will take a large portion of their income and use it to burn BNB tokens to limit the supply. In a perfect economic world, price and supply and demand should have some sort of elasticity where that would be reflecting, but that hasn't worked. I'll give you another example. Stellar, which is like, I think they're a top 10 or top 15 cryptocurrency. They last year, they came out and said, we are going to burn like 10% of the entire supply. They have it in their treasury, and they said, we're going to make a big statement to the market and say, if you value this project with X supply, it's now worth 90%. It's now has a supply of 90% X. Therefore, that limited supply should increase the value. The value did nothing initially, and then eventually went down. So that, Brian, that like things like that make me question valuation metrics within cryptocurrency, especially the very large ones. Another one, BSV, which is Bitcoin SV, which is a fork of Bitcoin. Part of the only reason why it has value is because there's a bunch of large holders out there that are just sitting on it. They're not moving. So anyone who's selling or buying in the float has no impact on the price. So it says it's worth some 8 billion, but it's not. It's not, because that's not the real fair market. So it's a challenge. It's a challenge to find the right valuation metrics. What I would do is I would point more towards, and this is kind of a dodging the question, I would look at the token economics of the team and the flotation. So is the team holding a large portion of it for their own, or are they incentivized to contribute and to build better tech so that they bring in a larger community so that more users get involved, not just for the capital markets of flippers and punters and traders, but actual people utilizing the tech, right? So I look at a project like Yearn Finance, YFI. There was no pre-mine, which means the team didn't carve out a portion for themselves. There was no VC funding. So once it went public, he didn't take a portion of it and give it to guys in Silicon Valley. And it's pure. It's pure. And so things like that I would look towards, rather than and then kind of the last point, I would look towards the newer DeFi tokens, specifically like Chainlink, Compound, Aave, UMA, Curve. Some of these are more focused on the token economics and allowing for evaluation metrics, where I'm very disgruntled by the 2016-17 vintage of cryptocurrencies, going down the list of XRP, which is Ripple, Litecoin's a little different, Cardano, EOS, Tron, all these older vintage. They raised money on this sort of enriching themselves, and then they just took off and investing it elsewhere. So look at new projects that are coming to market. DeFi is super exciting. Don't put your money where you wouldn't be able to lose it.
Understood. I get to follow up on that. So given kind of the group's mathematical background and our understanding of some statistics, some computer science, what are your thoughts about using kind of a factor-based approach to value some of these newer DeFis coming in, right? Everyone's got, we have the data on who's trading it, right? We have the data on the volume traded. We have the data on technical kind of indicators. In other words, the question is, do the assumptions that we have in equities for technical analysis translate over into tokens?
No, they don't. And because they all have different issuance models. I'll give you an example. Like, the issuance models are, many of them are they're not linear, but they're sort of like a curve, right? There was an initial issuance. There's the flotation. Let's say let's say that's, $100 million round numbers. And let's say that's the market cap today. But there are in the token economics, there are mechanisms for an annual inflation rate or an annual sort of an annual participation or a participation, sort of a performance. So the number of people staking will create a distribution of more tokens. So it's sort of like the more people involved in some of these projects, the more like something like kind of going through my list, something like Curve. Like Curve has there's a very small amount of float now, fully diluted. It's worth like $12 billion. Like that's not feasible. But that's after like a 30-year distribution cycle. So you got to look at what those, we're like YFI is zero distribution. There's no more distribution. It can only be used for staking. And so people are acquiring YFI to stake it or to yield farm it. And there's zero additional distribution after the initial launch. So there is no dilution. There is no more coming to market. And you could, same sort of factor with something like Bitcoin, even though we still have some inflation for a number of years, but it's very limited. So you do have to look at, the token economics of each project. Maybe I'll send around some resources. DeFi Pulse is a really good resource for looking at individual projects and analyzing what their distribution schedule is. But some of these can be based on, they could be based on a set distribution, which is X amount per year for a long time, or it could be performance-based. So the more people using it to stake, it'll have a bigger impact on distribution.
Understood. Thank you very much.
Yep.
Hi,
Tom.
can't hear you.
Sorry, you go first.
Sure. Aaron, go ahead.
Yeah, I just have a more general question about the Bitcoin world. Most of the investors in Bitcoin, are they like opportunity seekers, or do they really see value in Bitcoin and they believe in Bitcoin? Because I've heard the saying that a lot of people invest in Bitcoin because they have the philosophy of maybe deregulation or things like that. So what's your thought on that?
Yeah, that's a good question. I mean, everyone has their individual motive. I will say, I'm going to draw an example around the type of people that are investing. So there was, March 13th, right, was sort of the peak financial crisis in 2020. Bitcoin, the price of Bitcoin went down by more than 50%. I've been doing historical research. In the past 7 years before that, it's gone down by 20% in a single day, only 3 times. And on March 13th, 2020, it went down by more than 50%. And it's only gone down by more than 50% once in the last 7 years. So what we saw in March was like sort of tried and true, who's holding, who's not. And there was an analysis done that said the sellers, and this is great, and for you guys, like studying on-chain data, all the transactions are there, all the data is there, like the ledger, the complete ledger of all the assets moving, hypothecation, it's all there. So the study showed that of the sellers in March, a overwhelming majority, some 80% of them had acquired Bitcoin no less than 1 year ago. So we call those weak hands in financial markets. Those are short-term investors who were just de-risking. So I see them as maybe not believers. Maybe they took the blue pill, not the red pill. But they were the weak hands. And Bitcoin that was owned for more than 1 year saw almost no selling in March. So the people playing, this is where the technical analysis, I think, can be often misleading, because when you see some of the intraday, intra-week, intra-month price action, I'm not sure if that's reflective of the core holders of Bitcoin. I hold it for many reasons. I hold it as a proxy. Call it. I hold it as this hard money thesis, right? The e-gold. I hold it for a VC play on blockchain technology, right? And that that has proved out and all these blockchain projects in fact came to market, and Bitcoin rose with them, if not higher. So it's a proxy for VC investment in blockchain. And then maybe, I don't know who does, but there are millions of people that hold Bitcoin because they live under a government regime that they're afraid that they're going to be taken away from them. So Venezuela, South America, parts of North Korea. I mean, there are evidence of ownership. China, you look at the capital controls in China. So there are a lot of holders that are using it as a truly, maybe not a safe haven asset that we would think of a safe haven asset, but really a self-sovereign asset that no one can take this away from me. And I guess that's the third category. But you know what, we're seeing a new category of investors, institutional, and now it's real. Give an example. Grayscale Bitcoin Trust, there's $5 billion of AUM. As new Bitcoin is mined, the Bitcoin blockchain creates new Bitcoin. That's part of the annual inflation rate. The Grayscale fund is buying more Bitcoin in the open market every day than Bitcoin is being created from miners. So essentially, if there is an inflation rate of Bitcoin per year in supply, this one fund in Grayscale is eating up all that inflation of supply. Those are hedge funds that are coming in on the primary issuance. And there's also a lot of retail that are buying it in their brokerage accounts in their retirement. And so 3IQ were sort of the redheaded stepchild of Grayscale. We have a similar format, but with better regulatory controls. Fidelity is in the market, and they have assets from Sequoia, from Fortress, from large institutional investors that believe in this. That group of investors will increase every single day and could be a source of exponential growth in the price of Bitcoin. But the price of Bitcoin, not anything else, unfortunately. That's not my view. That's what they're seeking. They see 1,000 coins on the market, and some of them they're unsure. Some of them have really good tech. Ethereum is exciting. Polkadot's coming out with these chains. Ethereum Classic has a lot of development and excitement. But this last category of institutional investors, they do see a sort of like this, the internet gold as Bitcoin.
Do they come in mainly for just the hedge or just for speculative reasons? The hedge funds.
I think so. The world of hedging it's so. Short answer is everyone speculates. Let's start with that. There's not an investor in the world, especially institutional investor. If you have more than $1 million in investable assets, you absolutely should have a tiny slice of it that is chasing something very speculative. And that's, I mean, I'm a licensed financial advisor. I can stand up and say that, with honesty. So these large institutional investors, they're taking an allocation of a 0.5%, 0.25%, 0.5% of their total assets, and they're investing it in Bitcoin or blockchain related related investments. That's first and foremost. And there's a lot of studies that I could talk about that explain that an allocation of Bitcoin since inception would have beaten basically any other portfolio under the sun in terms of its relative performance against the risk-adjusted volatility. But the other, there's this new, I've been studying a lot around when you say hedge, we saw in March when all assets, when we had really, the horrible outbreak of COVID and the collapse of financial markets, there was not a single asset other than cash and treasury bonds and bills really just short term, the form of cash. Everything else declined in a very correlated way. There was no way to hedge against what happened other than owning cash.
That's very true.
And that's happening today too. And so the more the derivatives markets, the repo markets, if you look at basis traders on currencies, we've entered a world where everything is correlated. And so Bitcoin, unfortunately, will not be a hedge in the short term. If there's a risk-off market and people are selling risk assets, Bitcoin will be the first to go because they deem it as that riskiest part of it. So not until we sort of overcome the US dollar as a global reserve to replace that with something else, and it will be replaced with something else, guys. Like, I'm not saying it's Bitcoin or gold or going back to rare shells found on islands, but history tells us that what we count as money as civilizations has changed dramatically on like a 50-year cycle. So things will change, and Bitcoin it could be a candidate, but I don't know. So
This is,
purely speculative.
Yeah, I mean, this is
you were able to attain regulation, right? Sorry, Prof, if I may. You're able to attain regulation, like you're regulated. I was looking up at the site earlier, 3IQ, the crypto asset fund as well. I was just saying, I just wanted to find out, how are you able to get that dynamic? Because with majority of the current exchanges, you'll find that regulation is a big part, since most regions don't necessarily have the framework. So I just wanted to find out how you were able to, as 3IQ, get past that hurdle.
Yeah, no, that's a great question. So I've been doing a lot of research. If you go to my Twitter profile, I wrote a paper on Bitcoin funds, and it basically breaks down all of it has a sort of investment thesis around Bitcoin, but it also gets into all the investable vehicles that are private, public, institutional, retail, and many of these companies have been trying to get an ETF approved, which basically affords the retail public to invest in this assets. There have been a lot of things to overcome. So like custody was the first issue, and now we have qualified custodians from Fidelity and Gemini and Coinbase. Check. Then we have markets of substantial size. In 2017, it was smaller than what it is now, ironically, at a higher price. And we've solved that. We have huge spot markets, some 8-9 billion trading every single day. Then the issue was manipulation, and that's still an issue, right? Price discovery and manipulation. A large amount of volume occurs on exchanges like Binance, which is unregulated offshore. It used to occur on Binance. We'll see how that fallout happens. But a lot of the price discovery was not happening on regulated exchanges. And that's super important because the regulators want to see if you're quoting a price and you're selling that asset, you're quoting a price of an asset and you're allowing a fund to track that asset and to sell that to retail in the United States, you better have comfort over the asset in terms of custody. You better have price discovery on regulated exchanges. There was a third part, and this is where 3iQ triumphed. They made a case that it is not in the best interest of our investing public to have a speculative vehicle such as Bitcoin. And this was something that 3iQ fought, and they spent thousands of dollars, hundreds of thousands of dollars. And this is the case. Hester Pierce, she's a SEC chairperson. She's an SEC, she's not the commissioner, she's the chairperson. She has often said it is the SEC's responsibility to protect investors. It's not the responsibility for the SEC to pick winners and losers. And that's where we drew the line in the sand with Canada. And they said this is not in the best interest. And we proved, and Canada has a rich history of bringing commodity products to market. So there's a lot of precious metals, oil, gas, coal that comes from Canada, huge producer. And so the capital markets around commodities and investment products started like certificates against gold in like the 80s, revolutionary, because that was an asset that people in Canada wanted exposure to. So when Bitcoin came along, they were much more open and understanding of an investment vehicle that tracks an underlying commodity.
All right, thank you very much.
You're welcome.
Hi, Tom. I have a question about trading the crypto asset. So what do you think about the difference between trading a crypto asset and the stocks as a trader? And which difference do you think is the most important one in terms of trading, in creating some kind of trading strategies?
Very, very good question. There are so many different. I mean, Brian alluded to the valuation metric, which is essentially elusive, right? So unfortunately, traders have to rely on things like momentum, relative strength, volume. I would come back to things like the burn models, buybacks, token economics. Those are super important. I think I covered custody and security. If you are trading digital assets, you have to house those assets on exchanges. If you're trading on a DEX or DeFi, you have them on a hot wallet on your browser, aka MetaMask. It's very difficult to be a crypto trader and not have enormous risk of custody, both in theft, having a hot wallet, loss, having cold wallet. So you have to take huge precautions there. But then you have things like cryptos at 24/7, 24 hours a day, 7 days a week. And if you're in the equity markets, you get to break at 4 o'clock and have your weekend. So when you have and this is a huge challenge for algo traders, because you can't sleep when your algo is running, because you can have so many different events that could occur that could have an impact on your algorithm, unforeseen, to your investment mandates. So you need eyes on the screen. I mean, I was earlier this year, I had a big portfolio Bitcoin options. I was writing covered call strategies in regulated markets. It was a 24/7 market, but I would basically close all my limit orders at 7 o'clock at night because I couldn't have eyes on the screen. So that's a really big difference with traditional trading and crypto. But I would steer you guys, kind of taking cues from what Brian said in this audience. I would steer you guys to on-chain analytics. So look at companies like Chain Analysis. Chain Analysis is the leading company in on-chain analytics. They were just awarded a $800,000 contract by the IRS. They get paid by the FBI and the State Department to track people like me and whether I'm paying taxes or sending my assets to North Korea. They are the leading company that's doing that, and I'm glad that they're out there because we need those safeguards. And then other things like, DeFi brings in a whole new spectrum of technical analysis. So, you're not always going to see automated market making, liquidity, being a liquidity provider for some of these pools like Uniswap, yield farming. How can you algorithmically change from yield farming pools to seek the highest yield for stable coins? That's really cool. That's one of the things I've been honed in on, right? Because in a world of zero negative interest rates and essentially the idea of fixed income is gone. Quote me on that. If you're a high yield investor, you're only making 5%, you're basically a stock investor. Fixed income investing is gone. I've taken it out of my portfolio. So how do we get yield on cash? Here's a super risky way to do it. This is not investment advice, but you turn your cash into a stable coin, such as USDC, Tether. You stake it on these yield forming platforms like Yearn, Curve. There's a whole group of them. Those are probably the best. You can do this via Uniswap, MetaMask wallet, and you can earn a return via these protocol assets by just storing your US dollars somewhere. You have technical risk on the smart contract. You have your returns come in the form of new crypto, which could go to zero. So you can't really count that as return. But on an annual basis, risk adjusted, I'm doing it myself and seeking the 20, 30, 40% returns on an annual basis. Currently, you look at these numbers and it's like 1,000% return, but that's not sustainable. Yield farming as a money market account that's what DeFi is. I mean, that's essentially the promise of DeFi is earning a yield on your cash. Figure that out.
Yeah, thanks.
Hi, I have a question about, do you hold any short positions in the cryptocurrency, and is it popular for shorting?
Short positions?
Yeah.
Yeah, that's a good question. Prior to January 2017, there were essentially no mechanisms to short any of these assets, and that is why we saw a parabolic rise in their values. The CME, Chicago Mercantile Exchange, launched Bitcoin futures markets in January of 2017, and debatably led to the giant correction in cryptocurrencies, in Bitcoin. And largely the positions that were put on the CME were shorts in nature. And still today, I've done a lot of research with my class that I teach at Pepperdine. The CME is currently net shorts on exposure. But this is great. This is allowing institutional investors to come in and to be able to hedge exposures, be able to manage risk. Prior to 2017, actually prior to the beginning of 2018, investors had no way to manage risk in terms of direction. So CME came along, great, net short, tank the market. We have those mechanisms. There are other things, and now there's a thriving options market. So, I was writing call options, which is essentially a short position on Bitcoin. The CME now has options, but yes, there are things to go short. Not so much in the smaller market cap. It's really definitely Bitcoin. There is an efficient way to hedge your book, which is so important in price discovery. Ethereum still has hedging markets, but I don't think it's perfected. I think there's still a balance. There's not enough liquidity to really foster a clean, efficient market there. And then everything below that, the answer is no. There's not an efficient way to short any of the coins out there. We get into so that's the answer. And that's also the reason why things like Ripple and EOS and Bitcoin SV are maintaining their values, because no one's going to take the other side of that trade. No one's going to lend inventory so someone can go out and short. They don't want to hold that position. They don't want to take that risk. So that's a good question. There's an efficient shorting market in Bitcoin, which is good for price discovery, but there's not for many of the others. DeFi, things like UMA is a really exciting project where they're creating basically, we call them total return swaps. They're popular in FX markets, where you can just get someone that takes the other side of a trade on some notional amount. So it's basically you're netting at the end of the day or end of the month, end of a period, call it heads or tails, and then whoever wins that bet, you net on a basis. That's an important innovation in crypto, and I would love to see that thrive.
So how do you calculate your NAV? Is it based on the daily market price?
Yeah, so we have a couple of things. We have we use a service, MVIS. It's part of VanEck, and they use an index, very formal, calculated, and credible. This is super important. Index of what the price of Bitcoin is at the end of the day. And this is the SEC was challenging this because there are ways that people could attempt to manipulate it. That doesn't exist on Bitcoin anymore. There was a public company, MicroStrategies. They just invested $500 million in Bitcoin, and they didn't even move the market. I mean, that says that that manipulating markets will take so much money. We use an index because we have public investors. We have a public regulated entity. So we use an index, and then we have inventory. We keep inventory of Bitcoin at Gemini, which is a qualified custodian. They're NYDFS license, which is called the BIT license. We need protocols like that in place to calculate the NAV at the end of the day. If you're a proprietary fund or a trading shop or a private fund, you can basically just go out to the the liquid markets to calculate your price. Because we're a public fund, we use that VanEck index.
Tom, thank you very much for your time. This was very helpful for the class. Let's connect via LinkedIn.
I'll put my contact information in the chat right now. Anyone feel free to reach out. Happy to help.
Great.
Let me do that right now before I jump off.
I sent you a LinkedIn LinkedIn invite. I want to connect with you, and a few things I may you may find interesting.
Absolutely. Great questions. Thanks, guys.
Thank you.
Thank you.
Thank you.
Bye.
You're welcome. Thanks.
Zane, goodbye. Thanks for joining. Okay.
Thanks.
I
Bye.
see that John has joined us.
How is everybody today?
Hey. John, I believe that you've got some, maybe the teams have maybe some updates for you.
Yes, they kind of gave me the proposed outline.
Correct.
Yeah.
So, Ben, hold on.
Yeah, I'm on.
Just give me 1 second. Let me, I'm trying to push something off for a.
So Ben, Michael, and Yaron.
All righty. How have you all been?
Oh, we should ask you that question. You were on vacation.
Well, hey, I was on vacation. I mean, like, how bad can vacation be, no matter when and where, right?
But how do you manage how does that work? Vacation in COVID. I mean, did you go into a restaurant? Did you?
It's a dirty. It's a dirty job. Somebody's got to do it, right? Oh yeah, no, we did. We went into restaurants and
really?
we were down at the beach.
Okay.
So we practiced good social distancing, but it's after Labor Day. I mean, after Memorial Day, nobody's around. So I mean, it was nice, but so the restaurants were fantastic because they're and we don't mind eating indoors as long as we're okay with the restaurant.
Yeah.
Because
that's true.
And so my family's been in the industry forever, so I can tell what everybody's doing and not doing. So I'm a big supporter. So we had a good time. We had a really nice time at the beach. So
yeah, they have a tough time.
Well, you guys were. In fact, I do want to talk with you when you get a chance offline, because I want to find out how things are going for you.
Sure.
So okay, but yes, I had a nice time. I know everybody has been studying their Tukuses off. How's the beginning of the semester going?
Yeah. We're busy.
All right,
Ben, how you doing? It's your turn.
Starting to come up.
What?
I said it's exam season about now. So
sorry about that.
That's okay.
Tests. So you maybe Ben and Michael and Yaron, you want to present what you had, or what do you want to do?
Yeah, so we forwarded over just like an outline of sort of what, just so we kind of get on the same page of what we're expecting for this like project. So a lot of what we talked about or what was discussed at that meeting, I think like a month or so ago now. But just like the land aspect, the building proposal, and then sort of like the tenant specific information. So like who would move in, like what information do they need about like the area and whatnot. And then just sort of like a financial overview, which would be like the models that we were discussing about like returns for investors and returns just for the fund.
So, I mean, I looked it over. I thought it was a really good representation of what we talked about. Now, I know Professor Zorro and I were kind of, the one area, and he and I have been back and forth along this a little bit, and so we're trying to figure out, and this is under Section 5. So first of all, I thought that everything up to 4 was fine. It looked exactly like we discussed. I have some questions, particularly like in 3E, that kind of thing, because I do want to make sure I understand where y'all are coming from. But in the and Professor Zora may want to comment on this, but in the financial overview, we have a summary of the costs related to land, summary of the costs related to building. I thought we were going to try to do something when we're looking at the investment that we are going to make, or that potentially we can make, in the companies who are locating in other words, locating in the shell buildings that we're building. So it may be something we want to put a little little asterisk on. I also know that Professor Zorro and I were talking about perhaps that would be a second capstone project for a later of the next semester. So, Patrick, are you on board with me on that? Is he off? Can you guys hear me?
We can hear you.
Yes.
We can't hear him. I think
I
he
think
looked like he was grabbing a cord of some sort, so maybe his laptop's
okay.
about to die.
No sweat. So we'll come back to that. We'll come back to that. But that's so out of everything we taught, I thought you guys did a great job of capturing all the topics. So let me go and we'll push off number 5. Let me just write myself a note because I'll forget.
I think one of the questions we had was whether
so go ahead. You guys asked me.
Sorry. So I think the question I really had was whether this fund is being used to invest in the companies that would become the tenant, which is sort of what you just mentioned. But I wasn't sure if this is more so just like a purchase and development type project, or if you were planning on doing sort of like an investment along with in the tenant company.
We were to some degree. So we were trying to explore, can we do that? So we didn't decide to do it. Everything else is kind of decided. But when the last group was working on this, we were kind of exploring a number of things, and it came up that it looks like we can indeed do that. And so I was kind of looking at you guys and saying, hey, at some point when we get past the very beginning of this, and as you guys have really done your research, I'm sitting here going, okay, would I like to do it? I would like to do it. I think it makes some sense. And I believe, based on the previous group's work, that it does investments in the kinds of plant and equipment to locate that into the QOZs is financeable under this program. So the fairly certain conclusion they reached was that it's includable. You're asking me, do I want to include it? And I'm saying, right now, I think we keep it on the table, and we start saying, okay, because the how of it is very key to me. And you guys may have understood, as I said, Professor Zorro and I were talking, the real question coming, I think, to your group as part of this project is, does it make sense to include such an investment in this investment package? Or are we going to confuse the people who are seeking to get investments from by doing that? And I've kind of heard a couple of different opinions, not from your students, and it's kind of interesting. It's much more like a sales and marketing problem or question as we're looking at the prospective investors in these kinds of funds. Is that the kind of thing that might intrigue them? So I think for me, it's more, if we can do it, we simply need to set the investment vehicles up in such a way that people could opt in it, right? And the way we were talking about setting up the fund anyway is that they could invest in the land, or they could invest in the building, or they could invest in both. And so to me, investing in the companies that would be moving in would be like kind of a third choice. And I think some people would understand that and some people would not. I think generally investors, because it's less end use investors and more fund investors, I think the funds sit down and say, this is what we have expertise in, and this is what we'd rather invest in. See what I'm saying? So hopefully that thoroughly answers your question and doesn't thoroughly confuse everybody.
Yeah, I mean, I think that helps a little bit. My one worry is like whether the mandate of like the investment vehicles we're getting money from is like limited to one scope or another. You know what I mean?
Right. Well, I think we start seeing that as we develop the model out. So that's kind of why I say I think we keep our minds open to it. If we realize that the funds who might invest are closed off to it, we might find that some of the funds just want to invest in land. That was a hypothetical that came up out of the previous group, or they might just want to invest in buildings, same kind of hypothetical, or some of them might want to invest in both. And that's why we kind of stuck this, okay, we realized that we can, the investment in bringing a company in, by investing in the plant and equipment is doable. Don't know that it's wise to include it into the investment package. So your hesitation, I think, is an apt one. I'm just not sure whether it would help us or hurt us. So I think we have to be careful about how packaging the offerings as opposed to how we structure the offerings. Does that make any sense?
Yeah. If I'm being honest, when I originally was like thinking about the idea, I kind of interpreted it as like the fund would purchase heavy equipment and machinery sort of, and then do like a lease back on that as well to like the portfolio company or the tenant.
And I think that's high. I mean, I think that's highly possible. My only concern about doing a lease back in that environment is the company coming in would have to commit to a sufficiently long period of time and show the kind of financial health where we could do a lease back and not worry about that we have specialized equipment that's going to be depreciated very quickly at the after the beginning that we could get stuck for.
Yep.
Without a source to to liquidate that. So so that'd be my only concern. But but that's actually just enough. That's just calculating the lease rate correction.
Mm-hmm.
I do think, and it's an interesting consideration. And I have explored this separately. And if you want to talk offline with me about this, so I don't know. Do all of you guys? I mean, I know you see it on my resume from time to time, but I actually helped found a community bank in this region. And so there are things in banking called CRA, Community Reinvestment Act credits. It just so happens all these QOZs that we're talking about in this region all qualify for CRA credits, which is an inducement for the bank to invest in ventures in these opportunity zones. And in Pennsylvania, and in particularly the Lehigh Valley, 100% of our CRA type opportunity zones lay exactly over the QOZ. So it just happens to be one of those fortunes that we run ourselves into. But so financing those opportunities in a more traditional way, because of the CRA. In other words, if we cleared the land and built the buildings, and we're already recruiting a company in, we may not need private equity investors or the people that are investing in us, because I think a lot of banks would be interested in either lending the money or backing us in a lease program. So that's kind of one of these interesting pieces to this equation.
Okay. Would that limit?
So if you guys learn anything from this course, it's like like regular business. When you get out in the like the business world, you start realizing that interesting options kind of befall you as you get more and more into some of these things. And so I'm more interested, particularly out of this group, to figure out how we get started quickly. I mean, I think we have clarity that we can get through the entire process, but I think trying to get this pinned down and get started more quickly is of high importance, because it looks like the feasibility is there. It's just, okay, now let's get the structure and things down and find out what the investing groups have an appetite for. But yes, to answer your question, yes, we can. I would like to consider that as part of the inducement to get the companies in here. Whether we need a lease or we actually partner with banks, we might even find that we create a loan pool so that the banks can take advantage of the CRA credits, which they need, to continue as banks.
Okay, yeah, that makes sense. While we have you, so there's been like some turnover, obviously, from last semester about like the people on the team, including myself. So I think it'd be helpful for us if you could potentially forward like the information for the other resources that we have, like those two other individuals, one who's in the AEDC, right? And then the other, I forget their names. But the
Oh,
other people we were working with.
you're talking about Scott Unger, who's the
Yep.
director of AEDC. And was it perhaps Jim Harbaugh? Was that the
Yes.
other
Jim,
gentleman?
yeah, I think so too. Yeah.
Yeah. So I'm
But
sorry.
Ben, I hold on.
Well, I think I have their.
Because Ben, in the course, in the course site for the course,
yeah,
I have the link to John and the other two individuals, their LinkedIn.
Okay, I mostly just want to see like if they'd be available as resources to us, and like just like, I mean, I haven't spoken to them, so it'd be nice to reach out.
Oh, okay.
Yeah, let me give you know what I'll do is in the chat, I will give you their contact information.
Great.
Which I'll give you their name, I'll give you their mobile numbers, and I'll give you their email addresses.
Oh, yes, that we don't have all that. Yes, that'd be great.
Thank you.
Okay, so let me, while we're talking, so I can't, while I'm doing that, I'm just going to say send to everyone.
Your connection is a lot better than before, it looks like.
Well, who knows? You know, like you can always get you can always get lucky if you're me.
Okay.
3 o'clock on a Friday. You know, I doubt everybody's getting crazy with their you know, end of the day Zoom calls, and I also don't think there's a lot of yet at this time a lot of the calls, but it does seem like it's better than the 3 o'clock the last time we had about a month ago. So I would tell you guys while I'm giving you this, Scott Unger is going to be your best resource. Scott is the executive director. Jim is a volunteer. Now he knows a lot about the real estate market, but he is a volunteer. He's like me, except he hasn't been around as long. And so he has great real estate experience, both in his background corporately and everything else. So he's been a real great resource for us. I'm trying to do two things at once, which for me is never a good thing. So you may just want to, you know, like Scott's your primary guy. You may want to say to Scott, hey, is this something we should talk to Jim about? Scott's never bashful about suggesting that we bring Jim into something, or you can call me and say, hey, is this something, do you think that Jim could be helpful with? Because Jim wants to be very helpful, but sometimes he might defer well that, you know, Scott or John may want to weigh in on. So I'm just saying to you, because he's, like I say, he's relatively new, but okay. I'm trying to make sure I don't screw this up, guys. And if for some reason anything I send you doesn't work, don't hesitate to say, you know, that got hosed up. You may want to just follow up today. So I just sent you guys Scott Unger's email and cell phone number. At some point, we might engage with Aaron Hudson, who is the head of marketing for AEDC, but I figure we'll do that on the kind of more on the back end. All right.
Yep, that sounds good. I got the email, phone number.
Cool.
Michael, do you have any comments or questions for John?
Yeah, I guess I could use maybe some clarity on what our next steps are, what you'd want us to do next.
Well, I mean, you got this outline. So I mean, like I don't really care. I mean, I don't know how to say. Maybe I'm not understanding the question. So so forgive me, but I mean, how you go about doing it, I don't have a preference. I'd just like to make sure that the project does indeed get done. Do you have any concerns about like the sequencing?
No, I just didn't know if there was one thing that you wanted us to prioritize over the other within the, like anything you wanted us to get done first within the pitch book.
No, not at all. I think that you know, the objective is to make sure that everything's, you know, like done by the end. And Patrick, so let me go back to Professor Zorro for a second so that they all hear, because we talked a little bit about it, but I think you were offline. Let me just type this in real quick because I don't want to screw
Yeah,
this
take your
up.
time. Go ahead.
But what I wanted to talk with you about is section 5, the financial overview part. If you recall, you and I started having a conversation, which we had to defer.
Ben, can you share with us that presentation so we could see
Yeah, sure.
what he's referring to? So we same thing.
Can you see it?
Yep.
Yeah. Okay.
So John, are you referring to where are we going?
Give me one more second before we,
okay.
because I'm trying to type this, and that means I can't see what you're looking at.
Please take your time.
I just want to make sure they get this resource while we're. Okay, there we go. That should, you should have everything. Okay, so when we were last talking with the group, and we got to the point where we started talking about how we might use some of the QOZ funds that we got in to propose an investment in the different companies that we might bring in terms of plant and equipment. If you're, I'm just trying to stimulate your memory on this, Patrick. And so we were basically talking offline. Should we include this in this? Should we include the details of this in this consideration, or kind of keep it as a possibility, and really pin down the land and the building stuff? You know, in other words, sections 1 through 4. And then and as we're identifying what kind of tenants, specifically create a financing opportunity for the tenants as a separate project for a future NFE Capstone course. And you know, unfortunately, and I probably dropped the ball on this. We didn't follow up on our discussion. So that perhaps is something that we should discuss, so that the students in this capstone project know how we're going to handle that, because they're already in our previous discussion understood that we have an interest in figuring out how to finance it, and maybe we just kind of get into the preliminaries of that within the context of this project. But I think you were raising Patrick, you were raising some concerns that's already a fairly extensive outline and an extensive pitch book to put together, and I just didn't want to overburden the students for this topic.
Yeah.
So are you still? I mean, I presume that's your position then, right?
No, it is. It definitely is. I mean. Okay. Yeah. No, definitely.
Well, then we can tell the students. So I'm fine then with where we are. Although we want to keep a thought towards that we would consider financing these companies, the tenant specific parts of it, you know, where we're looking at the ideal and the tenant, we're going to kick over into the next capstone project. In fact, Patrick, perhaps you and I should kind of work up what that looks like, so that we make sure that the preliminary work that we need to do in this semester to set up next semester correctly is done. Okay?
Yeah.
So perhaps in section 5, although maybe it's better in section 4, where we start exploring, you know, like how we might do that, because it kind of kind of is in that. Actually, probably section 4 is a better section. So as we're, location benefits to the tenant, ideal tenant, building improvement costs related to the tenant. We may should add to that section D, students. If we add on 4, maybe we add a D that basically says equipment and working capital financing options. How about that? And that's just an outline.
Equipment and working capital finance option, right?
Right, as a 4D.
Gotcha. He's writing in
there. And then that I think sets us up for having, that as a cornerstone, because then that really, because they were asking me about priorities, then that really pushes that to, that they at least outline it, but the project itself gets outlined to a future date, whereas everything else on here, if we get it done by the end of the semester, I'm sure it shouldn't say if, getting it done by the end of the semester then allows AEDC to move forward in a very cohesive fashion in, like securing, the monies that they need to start to do the projects. And then while we're doing that, we can start working the, the tenant side of the
So I guess so according to you, John, so I guess we have all the pieces, right? I mean, 1, 2, 3, 4, 5. I guess now what the team needs to do is start to expand on them, right? To
I mean, I know you've looked it over. Are you with me that I think they've got all the pieces?
Yeah, no, definitely. What I'm thinking is in terms of timing, well, we still have time to get. The goal is I don't know about the financial, but I guess through the, and I think that's why Ben is talking about. Maybe he needs to talk to other people as well to help him and help the team fill in those sections more effectively.
Yeah, one of the things I would suggest doing, because now you do have their contact information, and forgive me, I thought that you all had that, but I would certainly take this document, supply it to both Scott. Well, I mean, I have it. Supply but I would like the one that where you just added 4D. I would supply this to both Scott and Jim, and perhaps, in fact, maybe we should do that right now. We can go through and identify, well, there's information that you're going to need from AEDC, right? So why don't we identify, on this or a different version of it, what we need Scott and or Jim to work with you all on, or even me.
Yeah, I think that was
So
one of the big things was
finding
the best path to get more information from AEDC.
Right. So I think, for example, in designated locations, that's a Scott Unger. This is, I'm looking at 2A. First of all, I'm looking at 1A. Is there anything, yeah, on anything on 1, if you have questions, I would, you guys have my email and cell phone, correct? I mean, you've been sending me stuff, so I assume that you had it. So I'm probably your best contact for 1, because it's really, more of the stuff we've been talking about. If you have some questions or you have some observation, like when you're starting to identify the potential fund partners, if you're like looking at
Ben, can you stop sharing your screen, because I think our next guest is I think Nick has just joined us.
Yeah. Okay. Just to wrap. Oh, you go ahead.
Go ahead.
So secondly, in land proposal, I would certainly think that that would be a Scott Unger, as well as number 3, because Scott knows both what we historically have dealt with on land and building. You all still there?
Yep.
Okay.
Sorry.
Yeah. So okay. So on section 4, that might be a really interesting section to get input from Jim on, because I do know that he understands a lot of the kinds of tenants that would occupy these buildings, and he has a lot of experience in tenant recruitment and what have you. So and I do know that he does understand a lot about the building improvement costs and different kinds of. So 4 might be a real good Jim Harbaugh section.
John, we need to wrap it up because I have my next
sweat.
guy.
Yep.
Well,
We'll
I'm
reach
done.
out
So
to,
if you guys, but if you guys need me, I mean, don't hesitate.
Yeah, that's probably the best thing. So,
I'm
Ben,
gonna reach out to
Alrighty.
Scott and we'll be in touch.
You guys take care. Thank you.
Thanks, John. Hi,
Thanks,
Nick.
John.
Thank you,
Hey,
John.
how's it going, guys?
Good. Marcella, where are you? What we're missing here? Kieran?
Yeah, I'm here. I'm just really sick.
Oh, no. Really? Okay. So just listening. You sound, we had a few people gotten sick in the university this week, a few of my students. I mean, everybody checked out all right, but that is the concern. Did you go on campus yet or not, Kieran? No, you're not on campus, right?
No, I'm off the campus. So
Okay,
I'm
okay.
off it.
They're shutting campus down.
Who said that?
They sent an email like half an hour ago or something.
Yeah, they're closing the library and everything's online on Monday, and then the gatherings is reduced from 10 to 5, I think.
Ah, okay.
So
I
apparently,
saw it coming through when we had a couple of cases, and then they shut down the gym. I mean the training, and I mean
yeah.
it's not that bad, but I think they knew they could see it. They could see it coming in, so knock it down before everybody gets out of control. So we have Nick with us. So I got Ben, Kieran, Marcella. Marcella is here with his new microphone, hopefully. Mike?
I'm here, Professor.
Where's Mike?
I'm here.
Oh, yeah, I'm sorry. You're there. And Kaisu, where are you? Can you hear us?
Yeah, I'm here.
Great. You're in the US, right? Kai?
All right.
Okay. You're not sick, are you? Are you okay?
I'm fine. Just the cold. Okay. Yeah, but my symptom is not serious.
Okay. All right. So as you can see, Nick, good thing we're on Zoom because I don't think we would survive in the same classroom here.
It's crazy times.
It is crazy time. This is not and you know, and so it's 2 out of like 10% of us are more. Hopefully, it's not that bad. So maybe I'm gonna say that Mike, Benjamin, and I'm talking about Mike, Mobarakai, Kai, Marcella, I know for a fact, Karen, maybe I'm not so sure, but you're all now participating in the weekly, you have access to the weekly, a little bit of admin, but you participating in the weekly training sessions, right?
I don't think I got an email for the one yesterday. I was looking for it.
Okay.
I think the one yesterday was just Zach and somebody else, so I just figured maybe it must be a personal meeting, so I just hopped off when I saw that.
Yeah, so Zach is actually on the call now, I believe. So Zach is kind of my partner in crime, and some of the meeting, like yesterday I had another meeting that conflicted, so he was on. But so the idea of that meeting is just kind of like a 1-hour time slot once a week where anybody can come in and, you know, ask questions and get help from us.
Yeah.
But that's not all you guys get. So you can, you know, you guys can use us as resources via email. And also we can set up, like, if you want like a whole, like a separate meeting just for you guys where we all kind of run through things in addition to this, you know, capstone call. We can definitely
It's once a month. But Mike, did you get the invite? Because I'm pretty sure you're on invitation list.
I'm on Splunk. I've been working on my project, but I'm not sure if I got the invite for yesterday.
So maybe can you send your email to Nick so maybe he makes sure that you get invited to whatever it is that.
Should I just send it below in the chat? Does that work?
Nick, how you want to do this? Is that okay? Because I think
Yeah,
he's the only one missing, right? Kieran, you got the invites. Well, you getting the invites.
I think I did, yeah.
Okay, and Kai, you getting the invite as well, right? Because I'm gonna put on your name.
Right.
Okay, great. So I think somehow Mike is out of. Okay, and then everyone has submitted to Nick their idea. Kieran, did you submit your idea?
No, I
Okay.
haven't.
So when you get better, take a look at what Marcella sent or Mike. I mean, these are separate projects really, so they're all working on their own research, but see how it's worded. And then Nick, can provide you with resources that you need to get it done. Kai, did you provide that?
Yeah, Nick has already replied my email yesterday.
Okay.
And Mike, I think you were already on the thing.
Yeah, that's what I thought so too.
Yeah, so the best place to go is just to go to Google Calendar, and you should just see it on your calendar.
Okay, thank you.
Oh, you're right. Yeah, you don't get an email. That's what
you won't get like an email ongoing. I don't think that's how it works.
You get it. So maybe we could run through some, and then maybe Nick, you could also quickly touch on that project that we're going to be working on. I'm working on the admin side of things,
Cool.
but we should be good to go. Mike, can you talk a little bit about what you're working on?
Yeah, so I think I clarified most of it in the email I sent, but it's all just like very preliminary so far. So pretty much what I wanted to do is see if I know you did some of this research already, or some dashboards exist on Splunk regarding this, but I wanted to pretty much determine whether there's a relationship between Twitter posts, Facebook posts, or all the sentiment data on Splunk and actual cryptocurrency prices. So I started building my dashboard a little bit, but I'm thinking, is there a way to kind of distinguish between positive and negative sentiment regarding like posts, like certain keywords?
Yep. Yeah. Definitely. So have you had a chance to kind of look through our documentation or some of like our videos on that stuff?
Yeah, you actually sent me, I think it was about 3 weeks ago, information on how to build a dashboard and pull some of the crypto data and then tie in the sentiment data as well, which is super helpful.
Okay, so there's for sentiment within NLP events within Splunk, there are 3 different APIs that we pull sentiment from. I'll send the page of our documentation portal in the chat right here. And so the way that you would find negative sentiment within Google or IBM would be any value that is less than 0. So the way that Google and IBM returns results is from -1 to +1. -1 is the most negative and +1 is the most positive. And then they break it down by entire document or the specific sentence that the keyword was in, or the specific language that was in relation to that keyword. Does that make sense? So there's kind of like the negative or positive for the whole document, and negative or positive for the sentence of the specific keyword label or in relation to that keyword label. And then for AWS, it's a little bit more complicated. So you can use that, but the way that they do it is it's a percentage allocated for the either the phrase with the keyword label or the entire document. And it's the percentage of the sentiment for those things that are either mixed, negative, neutral, or positive. So if something's really negative, it will be a high percentage negative. So it would be like 0.4 negative and 0.4 neutral and 0.2 positive or something. And that would be a document that is 40% negative, if that makes sense. So you can kind of use that. I mean, since it's essentially, you just have the raw data, you can kind of use that however you want. So you could filter for, you could say, I'm going to take events that use, IBM term sentiment that is less than negative 0.5, and only take those events and use those as what I'm going to use. But you can come up with whatever methodology you want. You could just use the raw values and average them. You can classify them into like 4 different categories, however you kind of want to do it.
Great, thank you.
So I have a question maybe for Pat.
Yeah, sure.
So is there something I should be doing for kind of like helping assess the progress on everybody's work, or is that more on your end?
No, it's definitely on your end as well. And that's the reason why I always ask, first of all, do they all give you a the rendition of what it is that they're going to be working on? So that's the first step, to make sure it's a viable research, right? And then it's the progress, right? At the end is there's going to be an end. There's going to be a final project. Either it's either it's on a screen, or it's an actual. The best thing, it would be great if you could get published somehow, if you could put your name on it and you guys put on Forbes. So that's how it's going to work. So I'm assuming right now they kind of, and except for Kieran and Kai, who don't have it yet. And as soon as they do, they'll forward it to you, because that's part of the process, right? Where you take a look at this and then take a look at what the end result is. I know Metzela is probably the one that's further along the way, because he started in the August. We have high expectation. He's going to be like the gold standard. That's why I say, take a look at the way Metzela did it.
So
That's
pressure.
But no pressure. No.
That's a lot of pressure.
So I think most of you guys have, even Kai, and sorry if I'm mispronouncing your name. You guys have all kind of sent me what your ideas are, and I think some of them were kind of more specific and some of them were kind of general. So maybe, but I think that what would make sense to me is to come up with like a more standard, research kind of outline, like you would if you were going to write a paper for like your intro bio lab class or something, where you kind of outline, these are the fields that I'm going to use from this kind of data, and this is the methodology I'm going to apply. And here's like a, you need like an N0, you need like a null hypothesis, and a alternative hypothesis, right? So it needs to be very structured, what you're going to study, and an outline of how you're going to study it.
Okay.
And then that way it'll be more easy to kind of actually have something physical that you're working on, and I can actually assess it, rather than just kind of like general questions.
Yeah, I think that's great. So I think the next stage is for these guys to then get it to a standard, as you mentioned. This is what should be. I mean, I'm mentioning Metzela because he started it, but I think we need to go beyond that and say, okay, now these are the things, the elements, and that's why I need you, Nick, to make sure that you see in there what the thing that is supposed to be in there. And then I want all of them to use that format.
Yes. Okay. So I will do that this week. Then I'll put together like a standard format for you guys. Would that be helpful? Where I'll say kind of like, these are the required fields, and then maybe I'll put together an example with Zach. So you can have like, you could even pursue the research question that we use as the example if you can't come
because then what's going to happen, in fact, I have some people that are going to be joining the program in January, and in January. So maybe then we could start off and say, okay, boom, guys, this is what you're going to need to do from now on. So the next class gets further along much faster than this class, and it speeds things up.
Yeah,
Great.
and I understand that the whole format of like learning online, everything is kind of new and everybody's in weird situations. So, you know, it's not like I'm not trying to be like a hard ball on anybody. It's more just the nature of our situation.
Okay, Marcella, you want to tell us a little bit of an update? Quick update, not too long, but
All right. I think for me, where I was sitting at pretty much, given the last email I sent Nick, I've been buried in the literature, just reading up to make sure that what I'm trying to do actually makes sense and I understand it. And luckily enough, I've been able to get a hold of an interesting paper that actually made simple what I sent you the last time. So as I explained the last time, what I'm trying to do is combine what I'm doing with Ethereum Classic Labs with the toolkits that Inca has to offer. So I'm sure Nick is aware of this whole online learning, machine learning sort of paradigm of looking at a portfolio. Can you hear me, Nick? Yeah.
Yeah.
So what I was pretty much doing on that front is that's actually what I was trying to investigate. It's just that the prior material I had before was presenting that in a very too technical ways for me to understand, but now I understand. So the visualization would pretty much be like I said, if you have Bitcoin or Ethereum and all of those, then try treat it as an asset and see then sequentially, for example, what value you get maybe by adding each single one to a portfolio. That's kind of how I'm trying to look at it.
So like a portfolio rebalancing.
Something like exactly something along those lines. Because I found it would be a bit simple, maybe, and also something that maybe you could be able to help me easily implement without overextending myself.
Yep.
Yes.
Yeah, that makes sense.
Yeah. So I could also share with you like some of the papers, actually 2 key papers that I've been reading. I've looked at the code through MATLAB and through Python as well, in terms of how they do it, and maybe you could guide me through that.
Yeah.
Can you share? Yeah. Mr. Can you share with me as well?
Yes, I will. Yeah, you'd actually asked me last week. Apologies for not doing
because
that.
I mean that's is for Nick's iteration as well. Is in all the other project. I mean, you have a project which is good, and you work with a sponsor, which is also good. But also want them to, as much as possible, which is a sign that they're going somewhere, is to expand. Talk to other people, or if you could provide them research papers or white papers, so that they expand beyond the realm of the comfort, right? Not just waiting for you to tell them, well, do it this way. I want them to search on their own. That adds value to what they're doing as well, so that they could learn more than what they expected to.
Yeah. Yeah,
The
that
more
totally makes sense.
yeah, no, definitely.
Both in terms of subject matter, and I'm sure you guys are doing a lot of research on the technical end, just about data models and using our system and like syntax and stuff like that. So you should be, to the extent that you can, documenting the stuff that you're learning, because those will be helpful to go back when you're actually working on writing up your project as like citations and things, right? Like if you learned how to code something that ends up getting used in your project, it'll be useful to kind of like have a list of all of the like YouTube videos and research papers and stuff that you consumed on the way.
Okay, next.
Yeah, I can go if not.
Sure.
So my project was like a statistical forensic analysis of trading data. So I've been spending a lot of time just like getting used to Splunk, like looking at order data, so like spreads and stuff like that. I was going through like the documentation from the terminal, and it says that you guys have OTC and dark pool market data. So I was kind of hoping you could maybe like that. I've just been reading up on like dark pool crypto markets and stuff. So is there like a way you recommend like sort of isolating that information? Because I think it might be a pretty cool path to explore.
Yeah, so here's something I'll just say about kind of the state of the market. Dark pools have been there. So there's kind of a difference between OTC and dark pool, right? Okay, so I won't go into that, but dark pools essentially don't really exist within crypto. And there's been a number of projects that have kind of tried, but none of them have been super successful to date. So there is essentially very little, and the main problem there is just liquidity. So what we do have in the system that's like useful data to work with is pricing data streamed from a series of OTC providers, and that all gets curated through our partner called Tacit, formerly known as True Digital. So I can point you out to that data set within our system, but that's it's like very basic. It's not going to be like the most, you know, high detail data that you get like on our centralized exchange feeds, where you have top of the order book and you have 1 minute candlesticks. It's more just here's a price that it was trading in aggregate over the OTCs that Tacit is partnered with. Does that make sense?
Yeah, that makes sense. Not all Tacit data is dark pool, correct? Like there's a bunch of data in there that I was looking at is Tacit.
Yeah, so there's probably we have tons of data sets I'm probably not even aware of. There may be data that they're providing us that I don't really know about. But we can, so I think that this is a really good topic, and it's something that this is the kind of data that I work with a lot, forensic analysis of financial data. So if it's useful, we can actually talk about kind of like some methodologies, and I can show you some of the standard metrics that we use, and probably some of the stuff that I'll be talking with Pat about on Monday. And maybe that'll be like a good example project for the rest of everybody if I kind of like give you some methodology ideas. Obviously you can do whatever you want, but maybe I can use that as the example for when I'm putting together kind of like this list of requirements for you guys this week.
Okay, yeah, that sounds cool. It seems like a pretty underdeveloped like topic, and that seems like it could be pretty useful to like research the integrity of the markets and where it could be going. So I thought that'd be cool.
Yeah, definitely, and it's something that not only is it potentially under researched, it's also something that has high implications. When the open data sets that everybody else is using, because you guys are using like data provided by us where you can actually see all the candlesticks, and you're working with a database. You're not just getting streamed things online like when you go to CoinMarketCap, but that's what most retail investors are using, right? And so there's implications with if there's a mismatch between what the volumes and liquidities are for projects that are posed to retail investors. If those things aren't accurate, and you can prove them statistically, there's high implications for that.
Yeah, it sounds really cool.
Okay. Anybody else? I think we went. I mean, we're missing Fikiri and Kai, but there's something to think about their project. I think we ran out of time, but Nick, I've spoken to them already about our project, so I'll spend some more time with some of them next week. I'm getting it done with the administration. I may get some additional students as well, so we should be good to go.
Yeah. So
and I'll see you Monday for the podcast.
Yeah, that sounds great. And so like the 30 seconds there is the thing that Pat's referring to. I'm sure you guys just talked about it, but it's a research and development opportunity with the Department of Defense through the Air Force, where they fund research between like sponsored private sector companies that are partnered with universities. And so the idea, and we've already done one of these in the past. We did like a just private sector one, but the idea is that we propose research to the Air Force, and if they think that our idea is useful, then they'll fund it. And so we essentially provide all the technology and everything, and then people can pursue the research topic that we applied for, if that makes sense.
Yep.
So they're setting up the topic, and then we can just kind of take stabs at it.
Yeah. So from our end, it's kind of like where our company is like proposing to the Air Force a research topic in partnership with Lehigh, and then if it gets accepted, you guys can essentially work on that project like through us, and it's a pretty flexible thing. So we haven't even completely like ironed out what it would be. So yeah.
So this is taking it a step beyond now, the capstone. Obviously, this is where it gives you real project.
Yeah, this is like an actual industry,
yes,
research thing, and it's a 3-phase thing. So the first few months, if it gets accepted, is this research effort where we essentially build out a project, and then what happens is our company will go and take that work that was done between us and the university, and we'll go find end users within the Department of Defense. So we can go to like the DIA, the Defense Intelligence Agency, and say, here's work that we have. We think that this is useful to you. And if they like it, they'll sign a MOU or a like memorandum of intent or understanding. And it'll say, we as an agency want to use this project that Lehigh has proposed, Lehigh and Inca have proposed. And if they sign that, then essentially what happens is we get another round of funding to actually build out a product. And then, you guys, if it all happens like that and we get accepted and it gets used by an agency, then potentially you have helped build, if you take part in this project, you have helped build a a product that gets used by an end user agency within the Air Force.
Right. Which obviously you're more the probably the best candidate to start, since you already kind of know Inca and the whole infrastructure. So you have kind of a leg up on something like that. But we'll discuss more next week on that as well. Okay, guys.
Cool.
4 o'clock.
Thank you, everybody.
Keep it on time.
Thanks, Nick.
Thanks, Nick.
Thank you.
Thank you.
Okay, everybody. Any questions?
I'll
Sarah?
drop you an email, Prof.
Okay, very good. All right, guys. Have a nice weekend.
You too.
Yep.
Bye.